All right, all right. Good morning, ladies and gentlemen. Welcome back to another ShareWise webinar. Today, I'm very excited to welcome Caedmon Marriott, the Managing Director and Executive Director of Western Mines Group, which is WMG, on the ASX. He's got a few very, very interesting topics he wants to go through. He's excited as well. We just had a little bit of a brief discussion behind the scenes, but I don't want to take the spotlight from him. I'll let him introduce the business, but thank you for your time, and let's get started.
Awesome. Cool. Well, thanks very much, Harry. Thanks for the invitation to present on ShareWise today, which is a platform we haven't used before, but thanks for the invitation obviously to yourself and Debbie and Caitlin.
Our pleasure.
Yeah, so I have a few slides to go through today. This is a slimmed down version of our presentation, just to hit some of the highlights. Obviously very keen to keep this interactive if you want to jump in with questions or other people.
Yes, spot on. I'll sort of jump in and out. Also, for everyone listening and watching, it is recorded, so if you have to jump out and miss a little bit, it will be recorded, so you'll be able to watch that. And also, it'll be a little bit of a Q&A at the end, so feel free to drop in any questions you've got, and I'll try and get through most of them, and it should be good.
Awesome. Great. Okay, so without that, I'll share my screen.
Yeah, try sharing. I'll let you know if it comes through.
Okay, cool.
Yeah, perfect.
Nice.
I've got that. Easy peasy.
Cool, great stuff. So today, obviously, presenting Western Mines Group, and in particular, our Mulga Tank nickel sulphide discovery, which is a major discovery the company made about 18 months ago, and we've been extremely focused on proving up a very significant nickel sulphide system. A standard disclaimer, which I encourage you to go and read later. And so just a brief overview on the company. I think, at our heart, WMG is an exploration company. That's our DNA. And in particular, playing in that steepest part of the Lassonde curve, looking for first discovery where you get the most uplift in value. I think every member of the board and every geologist down to the most junior geologist has stock in the company and has bought shares. And that's what we're about, creating significant shareholder wealth for both ourselves and our shareholders. We're focused in Western Australia, and we have a particular expertise in nickel sulphide, and in particular, my technical director, Dr. Ben Gregruic, is a world expert on komatiite and dunite-hosted nickel sulphide systems of the Eastern Yilgarn, things like Mount Keith, Yakabindi. He's first author on nearly every single scientific paper on things like Mount Keith from his background with BHP and Norilsk Nickel and various other major nickel companies. We have a huge system at Mulga Tank, which I'll get into, and we think this is a world-class nickel discovery, which we'll talk to in later slides. Firstly, just sort of jumping in, I guess, into the macro a bit, and I'm always quite resistant for junior exploration companies to be talking about the macro environment because, of course, today's current nickel price is completely irrelevant to us in a discovery scenario that won't be producing for a few years yet. But it weighs on sentiment, and so it's something that we need to cover. And even from my own personal point of view, I don't want to dedicate the next 5 years of my life proving up a world-class project and then wake up in a nickel environment in 5 years' time where this thing isn't viable or this thing doesn't work. So with that in mind and a sanity check, we attended there's an amazing Indonesian nickel conference in Jakarta in June of this year, which we went up and we sort of sat in the audience and just took on board everything that was going on. And amazingly, we came back very excited. And the reason for that was a number of drivers, and just to cover that, because there's probably not misinformation, but there's a lot of scare around Indonesia and nickel oversupply and short-term nickel sentiment. But we came actually back very bullish and very enthused. Yes, Indonesia is growing production. They're currently about 2/3 of world production and growing to 75%. But they're very conscious of doing that in a managed way, and in a sense managing almost managing the nickel price. They're calling themselves in a number of government representatives using the word ONEC rather than OPEC, being the Organization of Nickel Exporting Countries, because they have more control of the nickel market than anyone ever has. A lot of their production is certainly in the arc furnace producing nickel pig iron is actually pretty high cost. And there were Chinese companies there. You've got to remember about 90% of the production in Indonesia is Chinese owned, and it's just producing nickel laterite. Mostly 80% of the production is nickel pig iron, and that goes into Indonesia. It goes to China for stainless steel. So a lot of that arc furnace is relatively high cost, and a lot of great work that Jim Lennon does at Macquarie shows that of global production, only about 30% of global production currently makes a margin below $15,000 a ton. And there were Chinese companies there very transparently showing their cash cost is $15,000, $16,000 a ton. So at current prices, we are deep into the cash cost curve of nickel. And so there's a really hard floor in pricing here. And you've seen that over the last, probably the last 9 to 10 months. The nickel price drops down to about 15,600, and it's bounced off that level 5 times so far this year. So there's quite a hard floor in pricing. And we would argue that pricing only goes up from here. Their ore grades are falling very rapidly. The government was amazingly scared that their 1.5% gear, which used to be 1.8% 3 years ago, they think the 1.5% runs out in 6 years' time at the current run rate. And so with grades dropping, prices only increase. And so there's a huge headroom there versus other cycles. In previous cycles, nickel used to gap down to, $6,000 a ton. But we think there's a really high headroom now to operate on. And we think the nickel price environment is going to be a lot more stable. And if you compare that with ongoing nickel demand, both in stainless steel growth, which has been growing at China, even with China being modest growth this year, is still been growing at 5-6% stainless steel demand, despite the fact that analysts have global nickel production falling over the next few years to just 3% growth. China in a bad year is still growing stainless steel at 5 to 6%. And then you've got the layer on top of that, EV batteries and the nickel demand for that. You can see nickel, which has been growing at 9 or 10%. Analysts vastly underestimating demand. So you've got pricing at its lows, which only goes up from here as Indonesia manages the supply, and you've got demand coming through. So yes, there's short-term pain in the current environment, but we think this moderates over the next 12 months, and this is an incredible opportunity for nickel. Layer on to the fact that we are a sulphide producer, very low CO2 intensity, which is an increasing theme around nickel and green nickel and the CO2 content of your nickel. And you can see from this slide here in the yellow, if you're a sulphide producer, you are lowest cost quartile. So we came back very enthused that if you're able to produce below $15,000 a ton, and you're a sulphide producer in a Western jurisdiction, this will become an extremely valuable and extremely strategic asset on a 2, 3, 5 year view. And so, we think we've got one of those, and we will keep producing. And so just moving on to that, where is the Western world going to get its nickel from? 90% of Indonesia goes to China. How are Western OEMs going to supply their battery plants and their nickel needs if you don't want to be reliant on a Chinese supply chain? And so there's going to be an increasing theme of moving to large, low-grade nickel deposits, similar to what we have at Mulga Tank, although I will argue that it's a hybrid system in later slides. And so if you look at these are the top 7 or 8 nickel sulphide deposits, sulphide in the world. We think we will comfortably be in that top 5 of that, if not top 3. Canada Nickel there on the 5th place. They like to argue that they will become the largest Western world nickel complex, and we think we can be hot on their heels over the next 2 or 3 years. If you follow some of their economics, they think they're $15,000 a ton environment, they'll be making a 50% margin, which is simply incredible. Just structural margin of 50% for a 50-year asset. And so we think our asset will be better than that on all metrics. And so that gives us the confidence to continue exploring even in the current environment. And so as long as we think we can execute on a project with those requirements in the bottom corner there, we will keep exploring even through this cycle, because there's no reason for us not to. We need to be ready for the upswing, and we need to be ahead of the curve on that. And so that gives us extreme confidence in our assets and our abilities, and we'll keep moving forward on Mulga Tank. So just to jump into the asset and where we are, I said we're in Western Australia in the eastern Yilgarn, and this is Ben's backyard. He spent a lot of time around Kambalda, down around Kalgoorlie, down here, with working with the likes of Mincor, and then up around Leinster with Perseverance, Mount Keith, with both BHP and he found West Jordan at the top of that map when he was working for Norilsk. And so a lot of those are well-known deposits, and they're in a sense tired deposits. I mean, Kambalda's a very well-explored area, and yes, if you go deeper, drill a little bit further, you'll always find a little bit more nickel, just like the whole adage of exploring under the head frame. But that kind of exploration doesn't really excite us. We want to be bold. We want to go to the blank areas of the map. We want to open up new search spaces and find new world-class deposits. And so that's what's led us ahead of our IPO. We picked up the Mulga Tank project, which is we'd call it frontier. It hasn't really been explored before because it's exploring undercover. But it's only 2 hours out of Kalgoorlie, so an incredible location for what you would call frontier new search space exploration. And so we've been able to very cheaply put together the entire Menigual Greenstone Belt, which in itself is pretty unique. I mean, it's not just prospective for nickel, it's highly prospective for gold as well. But we own our entire Greenstone Belt, and you consider WA is pretty well pegged. That is a pretty unique asset for us. And so we think there's a large system there, and the analogs that we're exploring for are things like Mount Keith, which is what I'll refer to as a type 2 disseminated system, generally large, low-grade ore bodies. But actually, increasingly, what we believe it is more like Perseverance. We think there's a disseminated portion to it, but we think there's a monster lurking here of a type 1 basal massive sulphide, and something like Perseverance was the definition of its time at world class, 50 million tons at nearly 2.5% nickel, and we think that's lurking somewhere around the Mulga Tank complex. And just, also we haven't really referred to Kambalda, but I will touch on that as well. We think we can host things like Kambalda, which are generally smaller, higher grade komatiite channel hosted deposits. We think we have the ability for that. So we, if you step back and think about Kambalda, during the 70s, Kambalda was 30% of global production. It was the Indonesia of its time, if you like. So this is a very world-class area, and we think we have a very strategic new asset within that. Jumping into the Menigual Belt, here is the belt and our tenement package, and this is what we have. This is what we have pegged. This is defined by an aeromag image of the Mulga Tank complex, and at the southern end of the belt there is this very large, nearly circular air mag anomaly, which was actually discovered by BHP in the mid-80s in a large regional survey. They went out, bashed a track through the bush, went out and put a diamond hole right in the center of this circular anomaly, drilled 200 meters of dunite with nickel sulphide in, and then gave up because that's not what they were looking for. They were looking for an IOCG style target, and that obviously dunite didn't suit that model. They did do a little bit of follow-up work, and they tried to drill some RC along the southern boundary, but due to the sand cover, they set out to do 5,000 meters and abandoned that program after 1,800 meters because they couldn't deal with the sand. So ahead of us, over the next 40 years, ahead of us acquiring the asset at the end of 2020, there are only 11 more holes drilled within this. The bulk of those, 8 of those were drilled by Impact in 2013, over 10 years ago. But of those 12 holes, 10 of them showed visible nickel sulphide over an extremely large area. And so this really excited us. We were able to pick this up off a local prospector whom myself and Frank, the founders of the company, have done a lot of business with over the last probably 8 to 10 years. ahead of the IPO, and this was our flagship asset. And so we've been exploring here solidly for the last 3 years, and we've drilled another 81 holes, and 71 of those have extensive nickel sulphide mineralization. This is a really incredibly large sulphide system. And just to sort of show the sense of that, here's Mount Keith ore body for scale there. So you know, Mount Keith could easily be hiding multiple of them within the main dunite. And then at some point here, from this intrusive dunite, this system becomes extrusive, and these long linear features are interpreted to be komatiite channels. This is now extrusive ultramafic lava, and this is what hosts the Kambalda system. We drilled the first holes in that recently, back in September. And yeah, we were the first holes to prove that this is conclusively a komatiite system. The interpretation's correct. And, you know, we even encountered nickel sulphide some 6 kilometers away from the main dunite. So this is, you know, Ben's very excited about that. I mean, just essentially going drilling wildcat holes into this thing and finding nickel sulphide is incredibly positive. So just to jump into a few of our results, which I probably I won't labor on too much, but I can take questions on. We did a first pass of RC drilling, shallow RC drilling down to about 300 meters in October last year. 22 holes, 19 of them were mineralized. This is what led to us in February of this year putting out an exploration target, of which we very much presented 2 end members. An exploration target is a range by definition of the JORC code. We kind of fudged this a bit, but the ASX let us get away with it. And we sort of presented 2 end members. We modeled a higher grade. What we found was a higher grade core around sort of holes 15, 16, 18 in the center here, of around 300 or 400 million tons at closer to something in the mid 3s, 0.3, 0.35. And then defined by the other 22 holes in the fuchsia color is a larger system of multiple billions of tons, about 2.2 billion tons at about 0.25. Subsequently, over the last over this year, we've been back out. We drilled another 17 holes, very much focused on the core. The idea here was to reduce the drill spacing down to 200 meters by 200 meters. We think that could get us to an inferred resource of this area. If you look at BHP and their at Mount Keith and Yakabindi, they quote indicated resources on 80 by 80 spacing. So we think here being a lot more homogeneous, flatter lying, we're kind of aiming for maybe 100 by 100 for indicated and 200 by 200 for an inferred resource. And so these results even came back better. Obviously, we are targeting the higher grade area, so we were expecting better results. And we saw a lot more intersections of some very long intersections of sort of 200 meters at pushing 0.3% nickel. And then even more recently, we came back again in sort of July time. We drilled another 19 holes. Again, these were a combination of both infilling within the core area, taking that down to 100 by 100. Some of our focus there is on you know, we're already thinking about starter pit areas, and we need to find within this very large system, we have more than enough tons here for any length of operation you could possibly imagine. Even, you know, even producing 50 million tons a year, we could do that for 50 years. It's about finding the most economic tons, and then not only that on the highest average grade, but then we need to find starter pits where we can bring that forward in mine plans and juice up the economics of this. And so some of those holes were infilling around those richer areas, and some of these were stepping out into new areas of the complex outside of the exploration target, where we're following up on some higher grade results that we saw in some of these holes. And these were results that we recently put out in September, October time. And some of these were the best ones to date. Holes like hole 46 was probably the single best RC hole we've drilled to date. And this is in a sense a surprise of the RC drilling. We're drilling a sort of a large low grade system, but we're finding hits of, we've got 23 intersections here of above 1%, between 1 and 4% nickel. which is an incredible result, considering that this is still mostly on 200 by 200 spacing. And you don't see anything like this at Mount Keith. This sort of semi-massive sulphide gear is you don't find these high grade 4% hits at Mount Keith. But in a sense, Mount Keith is the outlier. It's probably the wrong analogy, and it's looking certainly like it's the wrong analogy for this system. This is more like a Perseverance or a Black Swan, Silver Swan. And what you see in the Eastern Yilgarn is a lot of these hybrid systems where there's both a higher grade, massive sulphide component and a lower grade. And so these higher grade results are clustering in 9 areas. But still, some of these holes, we can link up these intersections over maybe 200, 300, 400 meters, because of the scale of this system is just huge. But if you went back to Kambalda, some of these hits, people would drill 6 to 8 holes off the same pad chasing these results, and they would drill 50 holes in 100 meter by 100 meter box and prove up small high grade deposits. And so that's probably the next step of our strategy, would be to go back and revisit a number of these higher grade areas and prove up some of this, really good juicy gear, and then bring that forward in a mine plan, either in a large low grade mine plan or something like this, small within the top couple of 100 meters. We could, even develop that on a small starter operation on a standalone basis.
Just to quickly jump in there, Caedmon, when do you plan on scaling down and pinpointing on, let's say, 100 by 100 basis? When's the next drilling of more holes happening?
Yeah, so we're planning that now, and that'll be we kind of all the recent results are all going back into our modeling work, and we'll be back out there come end of January, February time for more drilling. And I think we'll probably it's a perennial thing. We have a huge wish list of what we want to drill, and this is a perennial discussion of how to get most bang from our buck. Obviously, that's what we're about here in exploration. And so I think we'll follow this new strategy of phase 3 of both a portion of holes will be going towards infill. And so, yeah, we will, exactly to your point, go and follow up on some of these high grade holes, particularly around holes 32, 46, and around there. But also we're very conscious of what this showed, that we haven't yet found the richest part of the entire intrusion. And so we do need to dedicate some money and some exploration to continuing to step out, both continuing to the south, where we can kind of show we have a sense that it's getting better towards the south and the southeast, and then we also move back towards the southwest as well, and cover that area a bit more. So yeah, great.
Beautiful.
It's the perennial thing, is what does the market want? And
no, of course, I mean, shareholders just want to see good results, right? So it's definitely a patience game. Things don't happen overnight, that's for sure.
So we'll certainly be. We need to do a combination of both. As I say, it's not necessary to make this bigger. We've got it bigger, but where we move to these other areas, in a sense, there's a whole lot of stuff out towards the original holes to the west that we're all coming out at about 0.25. That's what's bringing our average grade down of our large system. So as we've moved more to the east and to the southeast, those results have only got richer. We can drop those tons off at 0.25, and the whole thing's getting much closer to that 0.3 number. But again, as we've come south, we've got a lot more 0.3 holes. And so, it's the whole time we're dropping tons, moving tons, and moving around this intrusion. And so, yeah, it's a combination of both. So, but brilliant question. And just I haven't got much more to go, so obviously very keen to keep the dialogue going with questions. But just to say, we, as I said at the beginning, we've tiptoed out now up the belt. We're in the process of signing a heritage agreement with the traditional owners of this northern tenement area, which will allow us to grant tenement E39229. So the bulk of these komatiite channels are hosted in that tenement, and so that's why we haven't really focused on this to date. But we did recently with another EIS grant, which we've been very successful with in the past. We drilled the first holes into some of these linear magnetic features, interpreters, comatite channels, and all of those came in, particularly holes 62 and 63, where we intersected 300 meters of olivine cumulate. Looks like a comatite system, or it is a comatite system, but with 150 meters of sulphide mineralization in, which is, it's not only is it great that these are high MgO B zone comadites, exactly what you're looking for, but we know that they're fertile. We know that there's a really good system here, and these are 5-6 kilometers away. So we drilled them in that tenement just because obviously we have access to that tenement at the moment. But there's 15 kilometers here to play for once we get into this. But coming up in February, actually, there's another EIS round, and in this one, our portion of our area, our zone, you're allowed to apply for geophysical survey work, and so we may look to put in EIS applications for geophysics for both potentially a seismic survey over the main dunite, but then also a ground mag survey, a ground EM survey over these comatite channels as a first step to really getting into them. And so just what we always finish on, but just to sort of show consistency, this is kind of our exploration philosophy that we like to always try and get across, and that is, we are big believers in this Mulga Tank project. We're not a company that's going to suddenly go and pivot and go buy some antimony rock chip project just for a sugar hit and a small capital raise. We are really believe in this Mulga Tank project. We think it's exceptionally viable, and even in the current nickel price environment, which is why we'll continue to work on it. And we think we can find multiple world-class projects at Mulga Tank. Thanks to Ben and the team, we always try and do very, very high-quality technical work, and we try and present that as transparently as we can to the market and as thoroughly as we can. We're exceptionally frugal. I think you can go back through all of our last quarterlies, and our exploration expense to our G&A ratio is well up there. We explore boldly and we explore frugally, and that's because we're all shareholders, and no one in this company is doing this for a salary. We're doing this to increase wealth through our equity holdings. And we think in the current environment, if you want to be a contrarian, nickel's going no lower than where it is now. There's definite upside risk coming into 2025, and we'll be out there proving up this project in a rising nickel price environment. And so we think we're exceptionally leveraged and present a pretty compelling opportunity. So thanks very much.
Beautiful. Well, I think there's a lot of things going on, and obviously there's a few questions coming in as well. So if we can go straight into it, bit of a Q&A. But Jack's come through and he said, what is a rough time frame of when we can expect to see the maiden MRE and metallurgy results? Okay, yes. Good question. So we have been on both of those. Obviously, we're working on those. There's a bulk of, there's a certain amount of resource that we've drilled to 200 by 200. If I step back, perhaps a few slides. Okay, no, it looks like I've stopped sharing, but yeah, sorry, I'll let you. Yeah. And there you go. Should be sweet. Maybe if we step back to this one. So obviously, I mean, half of this fuchsia color is only drilled at 300, still only drilled at 500 by 300. So that couldn't be included in a resource. This other half here is largely drilled down to 200 by 200. So that could be potentially at an inferred level. And a little bit of that in the center is 100 by 100, and there could be a small portion of indicated. So yes, we're doing that work now to sort of prove that up. And it's a question of timing. Like, we can put out some number, and you often get hitched and wedded to that number. We don't know where to go and focus our infill drilling on, because we don't know where the best part of the system is. So I can put out a resource in this area now, almost at an inferred basis, on assuming the 200 by 200 portion. But then as I move further to the southeast, that may become the better visit, and I move around, and in a sense, the resource only gets bigger.
but where do we spend the limited funds that we have to maximize that? So we are conscious of that. We will probably in the first quarter, second quarter of next year, be looking at to put out a first resource. But you know, we want to make that a compelling number that we can then look to build scoping studies on from that point forward, rather than be continuously revising, if that makes any sense. In terms of the metallurgical work, that we, in our last drill hole, our last diamond core hole, MTD 29, we drilled the top section of the hole in larger diameter HQ core, which is, we drilled this with an EIS grant, and which is great. We get free money, but you have to give half the core to the government. And so previous holes that have generally been deep holes, we've given away the core and not had anything left for ourselves for test work. So this, we drilled it larger diameter to have more material. We collected about 112 kilograms. We've split that into 2 composite samples. So we have a composite sample, 2 approximately 55 kilo samples. One of those, we've merged all the sections together to make a composite of the mineralized zone, so it's kind of representative. The other bit we've kept very much as separate intervals, because we see, fortunately for that hole, we see different grades and sulfur contents, and so we want to keep that separate because that will come later for stage 2. So we have a bulk, and this approximates, I hope this is public, but I think it was. But this bulk composition, it approximates about, on our assay numbers, about 0.32, 0.325% nickel with about a 1-to-1 sulfur ratio. So about 3.3 sulfur as well. So fortunately, because we kind of drilled this blind in a sense, it represents what we think is approximately what we're aiming for this higher grade core area. So it's actually a really nice composite sample. We've done a series of flotation test works on that. We've done different grind sizes, between 75 and 150 micron. We've probably bounced around too much between those end members, because if you look at Mount Keith, grind size is about 100 to 120 microns. We kind of need to zone in on that a bit more. We've done a little bit of desliming and cycloning work, but not much and not enough. And we've tested a variety of different reagents. And so, you know, we're getting very good recoveries on all of those different results. And we've kind of, we've worked out that there's probably, apologies that this is a very long-winded answer. We've probably worked out that there's probably about 0.08 to 0.1 non-nickel in sulphide. So that's actually pretty positive. That's on a par with a lot of these Canadian projects. But whereas they're lower grade at the 0.23s and we're closer to a 0.3, but we've got similar non-nickel in sulphide, it means we've got more potentially recoverable economic nickel. So that's a massive positive. And then we've done a series of these tests, and we've been able to recover nickel in all of them. And what we're trying to zone in on is when we put out a number, we actually believe that this is a number that approximates what any potential flow sheet would be. And so it's a number that would only, if anything, be a base case and could be improved upon with further work. I'm not going to bag out any names and different people, but I saw a quote on a peer of ours with a large low-grade nickel thing put out something the other day, and they did. They used the single best, most expensive reagents you possibly can, which we've done that test. And of course, you get the very, very best recoveries with those, but they're exceptionally expensive. There's no way you'd build a plant on that. But that appeared to be the only test they'd done, and then put out a single number of recovery based on that. And so you've only got downside from there, right? You put that out to the market, and your number only goes down because you'd never build a plant there. We always try and work conservatively in the other way. We'd put out a number that we think only gets better. And at the moment, we're working on that. We've got a lot more work to do. So again, we're entering a second phase of that. And again, second quarter next year, in line with a mineral resource, yeah, we'll put out a bit more work on that. But that's something in process. Once we have a process, we'll then take that back to the other 50 kilos where we have different grades, and then we can run the same process across different grades, and then we can get a grade recovery curve and all that sort of good work. But yeah, that's all work in progress.
It's all in due course.
Yeah, unfortunately, that's always the answer, isn't it? Yeah.
Exactly. We've had another couple of questions come through. And Jack, just responding to you there, answering that question, he just said, thanks, Caedmon. I appreciate your work and conservative approach. Keep up the good work. A little bit of feedback for you. And then we've had a question. Can you please just discuss the issue of funding considering the current cash balance?
Yes, absolutely. We've lived very much hand to mouth over about the last year, where we've done capital raises pretty much every quarter. We raise $1 million to $1.5 million. You can go back through all our quarterlies. About $1 million of that goes into the ground. My drilling invoices are generally $300,000 to $350,000 a month, regardless of whether I'm doing RC or diamond. And about $200,000 a quarter goes on overheads and G&A. So we think that's an awesome ratio. And that's kind of been our run rate, running one rig. So yes, we're short of money at the moment. We're an exploration company. We'll always have to do capital raises. It would be nice we have the capacity to raise $3-4 million on our current capacity. Would we do that at our current price? Probably not. There's not much positive nickel sentiment out there. So we'll probably continue that. We've got a pretty loyal top 20, top 30 that generally chip into every capital raise and help fund that. So yeah, I think you'll see ongoing of the same strategy of that work, and continue to progress and continue to add value as we've been doing. Outside that, we have another number of irons in the fire of how we can potentially fund this on a larger scale, and we'll continue to work on that. But
are there any potential grants or government funding in the pipeline, or is that something you're not focused on at the moment, considering where the market's at?
Yeah, I mean, we always try and benefit wherever we can from government grants. So as I said, so yeah, we still have one active government grant for another deep diamond hole. We're looking. There's another round of grants in February that we'll be looking to apply for. A lot of this metallurgical test work and even a mobile MT survey they did last year is experimental in nature and qualifies for R&D rebates. So we're very conscious of eking out the money wherever we can to do that. So, but yeah, we'll continue to fund this and continue to move forward.
Beautiful. I mean, it sounds like you got a clear, concise plan, and it's just about executing it. And in the long run, hopefully it pays off for the shareholders and yourself included. Is there, just before we wrap things up, I always sort of like to ask these sort of questions. Is there one thing, to someone who might not be a shareholder or is looking to get involved, what's one thing you'd like them to know about the business? And over the next 1 to 2 years, where do you see the business going?
I think to answer that, I mean, it's how we try to present this. Look, I understand, all these questions around how you're going to fund it, dilution, and all these things that people worry about. I'm getting diluted myself, right?
Yeah.
So I'm not doing this for the salary, in a sense. I'm not going to raise money just to pay myself a salary. We're doing this to put money in the ground. So we manage that as best we can to minimize dilution in order to add value where we see we can add value as frugally and as efficiently as possible. And then I think hopefully it comes across that of how fundamentally we believe in this asset that we've got. It's painful in a sense in the current market that you see these absolute, excuse the language, dog shit shell companies with no assets, and then they go and, antimony's hot, I'm going to go and buy some moose pasture with an antimony rock chip.
Yeah.
I'll do a capital raise at a 40% discount to VWAP, and everybody buys it, flips it, quick sugar hit. And then 6 months later, antimony's not hot, and they go and buy a uranium asset and do the same thing. And how those companies still have credibility and how people still put their money into them is just absolutely beyond
mind-boggling.
And so, it's kind of like lie to me once, fool is me, or whatever the expression is, right?
Yeah.
This is a project we're going to see through, and we're going to do it as best we can, managing capital, adding value, and the trouble is that's what you're competing against in the current market. If I come with a fairly tight capital raise at minimal discount, as small as I can do to progress, versus someone else is offering a 40% discount to VWAP, people don't differentiate. People don't.
No, of course.
It's just insane. But we'll just, we hope the shareholders that we have back us, and they do, and we're on board with them because we're shareholders ourselves, and so we'll keep doing the best.
Well, it sounds like I said, you've got a lot in the pipeline, and you've got lots to lots to show for it, which is very, very exciting. But I want to thank you for your time. I know you're a busy man, and on behalf of Sharewise, it's been a pleasure.
Cool.
All right. Well, again, enjoy the afternoon. We'll talk soon.
Sorry, Harry, one more thing. If anybody has any other questions, I think, all our contact details, my phone number is always on the end of every single announcement. So I'm always happy to take shareholder queries if people have anything they haven't already raised. Cool.
Yeah, perfect. And like I said, it is recorded, so you can jump on the Sharewise YouTube or our website. I'm sure Caedmon, he'll put it out there for people to just double check over it and rewatch. So enjoy. And my name's Harry McCaskill. It's been another Sharewise webinar.
Cool.